Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on the 3rd of February, interest rate decision day, and the Reserve Bank of Australia decided to hiking rates by 25 basis points to 3.85%, spooked by inflation. I think that's fair to say. The board, as the Governor Michelle Bullock was apt to repeat time and time again, that the board is uncomfortable and did not want to send a signal that it is okay with inflation being so far out of its target band, hoping, of course, that inflation will wane, hoping that its actions will take the heat out of some parts of the economy, I suppose. More a supply constraint story. Anyways, we'll get there in just a moment. We did bring you plenty of analysis as the decision was handed down, and we'll bring you the best of that in just a tick. Just let's check in on equities, because of course we did see that dip after we had the news that the RBA would be hiking rates, but arguably, if you see the price action to the close, that was already in the price. So when we got that inflation read, if you recall, and then followed up by the unemployment read, which came in lower than expected, markets started to price in the fact that we could be seeing rate hikes come. In fact, we had all four of the big four banks expecting this hike today. So yeah, that's why I say arguably that news was already priced in. Where we have seen a dramatic impact in market terms was with the Australian dollar. So the Australian dollar, shooting up past resistance levels. We'll hear from Stephen Dooley from Convera in just a moment. So, I mean, this is the theme. We are one of the only central banks in the world hiking rates. I suppose mortgage holders unhappy, but if we're honest, there's a lot of people that have a certain demographic that will benefit from this hike in rates. And it was unanimous by the board. I told you that the Australian dollar soared past 70 US cents, but we did see folks coming in to buy the dip. And it was a positive session as well. Even before that, I mean, really, if you take things into consideration after yesterday's rout when it came to gold, things were looking better in many sectors. And that included the tech sector today. WiseTech, Xero, NextDC, Technology One, Zipco, all looking very nice. Of course, these are beaten down companies. You've got the real estate sensitive, interest rate sensitive stocks still closing higher, with Goodman Group up by 2%, SGH as well. Now, gold, it's always worth checking in on gold. Big recovery happening there, so that's where we're seeing folks coming in and buy the dip. Evolution Mining, 3.6% higher. Newmont up by 6%. Of course, not erasing yesterday's gains, but still nice to see positivity on your screen. Ahead of its results, Commonwealth Bank says it's recognized a $68 million provision for the 2026 half year relating to an additional goodwill payment. On reporting season, Corp, it saw net profit for the half come in at just over $44 million, in line with the prior year, but below analyst estimates. We did speak with the CEO in the wake of that result, which saw its share price down by close to 16%. You can catch that online at ausbiz.com.au. Xero says it's looking to expand its global AI offerings and U.S. payments business. And Korea, its shares absolutely soaring after confirming U.S.-based Aura Consolidated will acquire it. So up by 31%. And that was a pick for many of our small cap investors already. So yeah, I hope anybody out there watching owning Korea has done well. Neuren Pharmaceuticals received a negative vote on a marketing authorisation for its application for its Rett Syndrome treatment in the EU, and that took the wind out of the sails of its share price to the tune of close to 10%. Well, as I said, the Reserve Bank has lifted official interest rates by a quarter percentage point to 3.85%, pointing to that materially higher December quarter inflation read, also saying that credit growth has picked up sharply and it has lifted its forecast for inflation going forward. Let's get some reaction from Sean Fenner from Westpac.
Well, I think there's sort of three reasons behind it. I mean, let's face it, also they'd pretty much set it up in November with, talking about the upside risks to inflation. We had a solid, Q3 that was followed up with a solid Q4 underlying inflation. Too high, I think, for them to ignore. Also the labour market sort of indicating that, the gentle easing we'd been seeing has ceased. And then consumers. Consumers looks like it's actually going quite strongly in Q4.
69.60, very close to 70.10 now. So it's been a big move in the reaction to that announcement. It's pretty clear there's been a shift in the RBA's tone. If you look at their previous statement, they were saying they would take some time to assess whether inflation has moved back above the target band.
I think it'll be very balanced and probably a little somber, because this is not really what anyone was hoping for. But, you know, difficult decisions have to be made, and this was clearly a difficult one for them. Particularly on the Australian dollar, I think it's worth pointing out that not only does it help to some extent relieve some of our inflation pressures, but it also attracts foreign direct investment, which then also increases pressures as well.
Not really unexpected. The banks have come off on the back of it, I guess, and that does put pressure on mortgage holders, which puts a little bit of pressure on banks. But, you know, they've sailed through much higher rates, so I don't think it's going to be a major consideration. And you have to remember that, you know, what is good for the goose can be bad for the gander, and obviously the gander is mortgage holders, but good for the goose is those retirees and people that have cash in cash management accounts, or sitting on the sidelines, or savings for deposits, for houses, etc. It is good news for them, because they are going to get basically a pay rise by 0.25%.
For those of you listening in, that was Sean Fenner from Westpac, followed by Stephen Dooley from Convera, Amy Lomas from PwC Australia, and Henry Jennings from Marcus Today to round up some of that analysis. So fascinating times. We will continue to keep our eye on the Aussie dollar as well. We had reporting season to contend with today. Credit Corp reported. For some analysis of that, our stock of the day pick was joining us Sean Hickman from Market Matters and Scott Phillips from the Motley Fool.
I think an okay result from Credit Corp. Nowhere near what the market wanted, as you've already mentioned. I mean, that's a pretty significant 15% miss against the Jefferies number, and no surprise, shares down about 14%. I don't have a strong view on Credit Corp's long-term performance. It's a really tough business. There's cycles within cycles for this. You've got the cost of the debt ledgers you're buying. You've got the cost of collections. You've got the ability to collect based on the collectees, if you like, the people who owe the debt, their ability to pay back, and that tends to be economically related as well. So you kind of got to put all this together and say, well, where are we at? How much are they having to pay? What's the competition like? How good are we at collecting? How likely can we collect based on the conditions or the circumstances?
It's been struggling for a long time. You had the graph up there before. It's been struggling now for 3 or 4 years. It's effectively missed quite badly today. The stock's down 14%, missed expectations. There we are, great. It was $34, today it's $12. We are not in a market where investors are trying to pick the dip of stocks that miss. We're in a momentum market. I don't want to go back to gold. People are talking about gold all the time at the moment, but people
we'll get to that. Yes.
Yeah, I'm sure we will. I've looked at the next stock. You know, this is a stock that's struggling. It's just missed. I don't see any reason why you'd buy it.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
So there you go. Plenty of analysis on reporting season thus far. Please do join us throughout reporting season. We'll bring you the analysis. We will bring you the CEOs to find out what strategy is going forward. Let's get across, though, today's market leaders in the large cap space. We had, some good gains being made in the gold space as we saw some rebounds happen. We saw a much calmer session in Asia today, and also some of those big miners as well. Let's take a look at some of the laggards on market today. Doesn't look as if those graphics are working. That's okay. Let's take a look at some of the small to mid cap space. Yeah, there's Korea. They're up by 31%. Atlantic Lithium as well. Terra Metals, Loomis Diagnostics, and then of course taking us through Kyoris Materials. Well, I am not familiar with that company. I will be doing my research. So let's get to the laggards. Atomic Eagle on there. Kelly Partners in the accounting space down by 7.7% to $6.23. Just to get you across it, Drone Shield did well along with Newmont, NRW Holdings, and Life 360. In the larger end of town, it was Neuren that was the biggest laggard. Grain Corp, second day of losses, and EBOS Group down by 2.5%. So what do we get overnight? Look, there's a partial U.S. government shutdown, so I think we're getting the JOLTS job openings tonight. I think there's a question mark, though, over non-farm payrolls coming through. Also, still in the midst of earnings season there with AMD, Chipotle, Supermicro Computer, and Pfizer coming through. Now, tomorrow here we get an unemployment rate across the ditch in New Zealand. We also get earnings from Amcor, Charter Hall, and the Centuria Office REIT. All right, it's been a pleasure to be with you throughout the day today. Sector-wise, 10 out of the 11 sectors ended higher. What was lower? Utilities, often a defensive part of the market. Tech was the best performing sector, up by 2.2%. So nice to see a bit of a rebound happening there. Keep in mind, though, off by about close to 5.5% for the past 5 trading days. What will tonight hold other than that data? Well, we did have the U.S. president talking up a deal that was done with India. That has also helped calm the mood here in Asia. Remains to be seen, of course, what will happen overnight there. The political front, always fascinating here lately as well, too, with the coalition. And just checking in on U.S. futures. Both S&P 500 and NASDAQ futures are higher at about 23 past 4 here in Sydney. The S&P ASX 200 closing 0.9% higher. Pretty good, considering we did have a rate hike coming through and likely an accentuated differential with the United States continuing to push the Aussie higher. Nice to be here with you today. We'll see you tomorrow.